Hi there, good afternoon. You're watching Market Fatafat on ET Now with me, Snehisha. This is a show where we'll be taking you through all the big buzzes in today's trade and also be giving you a technical check on some of those. And we'll be doing this in under a minute. Before we do that, let's take a look at what the market is doing right now. And steep cuts coming in on the Nifty 50, 1.5% lower. We're barely struggling to hold on above the 23,000 level as well. Almost at the day's lowest point is where the Nifty is at, and we are struggling to see any gains on Nifty. Sensex 2 in tandem, the sell-off has intensified over the last 30 minutes or so. 1.5% lower is where the Sensex is. Nifty Bank also 1.3% lower. India VIX has suddenly spiked up 5%. We're above the 15 mark now on the India VIX. Rupee has once again come under pressure, although the rupee has solidified some good gains against the dollar. You only have 2 out of the entire Nifty 50 pack, 2 stocks in the green, rest everything 48 of them in the red right now. That's what the market construct is looking like. Let's take it over to Osho Krishan, the senior analyst technical and derivative research at Angel One, who joins us to give us a technical check on this chart. And from our research team, in-house team, we are being joined by Ria on the show today. Good afternoon to both of you. Let me highlight the first stock that's in focus today. This stock has taken a beating in today's trading session, down by almost 6.5%, and that's Eicher Motors is the first stock we wish to highlight on a consolidated year-on-year basis. You have revenue and PAT that are in line, but a big miss coming in on the EBITDA and EBITDA margins. Revenue has come in at 4,973 crores, which is up 19% year-on-year. Net profit is up 17.5%. You have EBITDA that is up only 10.2% year-on-year, and EBITDA margins have shrunk slightly at 24.2% compared to 26.1% on a year-on-year basis. From the con call highlights, the company says that the planned capex target for FY25 of 1,000 crore rupees is intact, and here's what brokerages are making of this stock. Goldman Sachs has maintained its buy rating, has cut the target price by 100 rupees to 5,900 from 6,000 rupees earlier. They say that volume momentum is expected to continue in Q4, but they've also cut their FY25 to 27 EPS by 5.4% due to high marketing expenses. This is what is the lowdown on Eicher Motors on the back of its earnings, or the brokerages are making of it. 6.5% cut coming in on this Nifty 50 major. But moving on, let's talk about yet another Nifty company. Also, you've picked out Adani Enterprises for us. Fundamentally, we understand this stock is managing to hold on to the green on the back of that FCPA order that Donald Trump has just signed. What's the take on the charts? What is Adani Enterprises looking like, and what are the next levels to watch out for?
Very good afternoon to both of you. We're looking at the technical perspective of Adani Enterprise. In this counter has been hovering at a very crucial support zone of nearly 2200 levels. It has been seen as a very strong support in the month of October in the year 23, and again has retested the same zone and is kind of consolidating around the zone of 50 levels. So I'm expecting that in the coming period, now the counter have started gaining a decent price traction, and with the news flow, there is anticipation that this counter can see some kind of strong buying traction in the coming period. So I'm not very much aggressive in this counter, but in the short-term period, I'm expecting that it can test the zone of 2550 to 2600 levels from short-term perspective. So one can definitely try to accumulate at current levels, keeping a strict stop loss of 2200 for upside potential target of nearly 2600 in the short-term time frame.
Next key levels to watch out for an Adani Enterprises, 2600 on the charts. That's the word coming in from Osho. Riga, coming to you, Apollo Hospitals, yet another Nifty 50 company and yet another big Nifty loser. Big cuts coming in on this one, 6% lower. Tell us what is ailing the stock.
Well, yes, after the Q3 results of the company, Apollo Hospitals has been in focus. Now, overall, the results have been in line with estimates. Revenue has been in line, but the EBITDA and the margins, there has been a slight miss on that front. Margins have come in at 13.8% in this quarter. In terms of the net profit, that has been above estimates, up almost 52% on a year-on-year basis. Now, what has been good is the growth across segments. The street was expecting a margin decline in the AHLL segment, but that has shown good growth. In terms of the occupancy, that has dropped to 68% versus 75% on a sequential basis, although this was expected. And what has been slightly a miss on this front is the GMV of the Apollo to 24/7 at rupees 760 crores, flat on a sequential basis, but an 11% growth on a year-on-year basis. Now, this GMV was expected to reach rupees 1,000 crores in the next 4 to 5 quarters, but the slow run rate is what is spooking the street. And on the back of this, the stock is trading with cuts of almost 6% as we speak.
Okay, so that's on Apollo Hospitals, still trading in the red and how very deep cuts coming in. But let's move on and talk about Escorts Kubota. This stock also in focus on the back of its quarter 3 earnings. Revenue, EBITDA and margins have been a miss compared to what the street was expecting. PAT is largely in line. On a standalone basis, the revenue has come in at 2,935 crores compared to 2,700 crores this time last year. Net profit has seen a very little uptick coming in, but nonetheless, it's in line with what the street was expecting at 323 crores compared to 298 crores. EBITDA has missed expectations, coming in at just 335 crores compared to 324 crores, and margins have also shrunk nominally at 11.4% compared to 12% this time last year. Some highlights from the management commentary. They say that Agri EBIT margin has fallen 160 bips to 10.4% due to higher input costs. Total tractor volume up 4.5% in quarter 3 for Escorts versus 12.7% industry growth in the same period. So they're lagging the industry growth by a lot right now. And domestic tractor volume is also up 6% for Escorts versus 13.5% for industry growth. So once again, they're trailing the industry standards over here. Now tractor volumes is down 29% for quarter 3 versus a 4% industry growth. So in fact, they're on the negative side over here, which is what is weighing on the stock significantly right now. From their con call highlights, the management expects good growth in quarter 1 as well. But that's the outlook on Escorts Kubota going ahead. Weak set of numbers and the stock is under pressure. But on that note, we'll slip into a very short break on Market Fatafat and keep it going with all the stocks on the other side. Right, well then, let's keep it going with all the stocks that are in focus. Osho, you've picked out Affle India for us on the charts. It's a stock we don't usually talk about on the show. Tell us what's making this stock look attractive to you, if at all, because last 1 year it's seen a decent gain coming in, roughly 40% upside, but all of that has fizzled out over the last 6 months or the last 1 month too. So tell us what's the outlook on the charts going ahead.
See, overall, Affle India has seen a very strong breakout in the month of June 24 from the zone of nearly 1300, 1350 odd level. And from there onwards, there has been a gradual up move. But in the recent period, we have seen that there has been a decisive correction in this counter from a higher zone of nearly 1880 towards the zone of 1450, which even coincides with 200 simple moving average. So I'm expecting that it is having a kind of a support near the zone of 1450 to 1500 odd levels. And with the kind of movement that we have seen in the last one trading week, there can be a possibility that the zone of 1450 to 1500 can see some kind of short-term support formation for this counter. So I'm expecting that in the coming 1 or 2 trading session, if the counter subsides near the zone of 1500, it will be providing an ample opportunity to accumulate this counter for higher target of 1700 on immediate basis, followed by 1850 from short-term perspective.
Okay, so that's the outlook on Affle India. Ria, coming to you. Varun Beverages is a stock that you've picked out for us. Numbers came in yesterday. Tell us what the brokerages are making of these earnings.
Well, yes, Morgan Stanley has come out with a note on Varun Beverages. They've maintained their overweight rating with a target price of rupees 674. Now, the company has reiterated its guidance for volume and margins in calendar year 25, and the growth momentum also remains strong in quarter 1 of calendar year 25. Now, the management is not seeing any effect of competition from Campa in India, and the market already had a 20% share of B brands, which were cheaper than Pepsi. Now, what Morgan Stanley believes is that distribution expansion opportunity is in double digits from 4 million outlets, which remains the key growth driver for Varun Beverages, and the market is large enough to accommodate new competition. So quite a positive note coming in from Morgan Stanley, but the stock is underperforming today, trading with cuts of almost 6% as we speak.
Okay, so Varun Beverage is also giving into the market pressure right now, a 6% cut on that. Osho, coming to you, seems like you've picked out both of the nifty stocks that are in the green right now compared to the 48 that are in the red. First, Adani Enterprises, now you've picked out Grasim for us, that's holding on to the green by the skin of its teeth, but nonetheless, it's gaining in today's trading session. Last 1 month, also a 9% gain coming in, not too bad for a stock like Grasim. Tell us what's the outlook going ahead.
See, overall, this counter has been consolidating in the last 10 to 12 trading sessions above the 20-day exponential moving average, although the prices are still in a very strong, slender, range-bound movement, but gradually there is volume that is picking up pace. So I am expecting that in the coming period, there is a high possibility for this counter to give a very strong breakout. I am expecting the zone of 25.20, 25.50 is the immediate hurdle for the counter. The time it surpasses the zone of 25.20 on a closing basis, we can see a very strong momentum coming in this counter. So one should definitely keep Grasim on their watch list. The time we see a decisive 30 to 40 points of move from here onwards, there can be a decent movement coming in the short-term period for approximately target of nearly 2680 to 2700 levels.
Okay, 2680 to 2700 on the upside. That's the outlook on Grasim coming in by Osho. But on that note, we'll wrap it up on this edition of Market Fatafat when it comes to all the stocks that we wish to highlight. Ria and Osho, thank you so much for joining us. But before we call it a day, Adani Defence and Aerospace, in collaboration with the Defence Research and Development Organization, has unveiled India's public-private partnership-based vehicle-mounted counter-drone system at the Aero India 2025. Developed in collaboration with the DRDO, this state-of-the-art system marks a significant step in enhancing India's defense preparedness against evolving aerial threats. The vehicle-mounted counter-drone system ensures long-range protection, agility and precision, making it a formidable asset for modern defense forces. But on that note, we'll wrap it up on this edition of Market Fatafat. Thank you so much for watching.